Hi traders, I'm Ken Calhoun from TradeMastery.com, and if you're like a lot of the traders I've worked with since the year 1999, you struggle with your entries, your exits, with clear explanations of why and how to enter your trades and the difference between successful and unsuccessful trades. I'm going to tell you a little bit about Trading the Open, my live room experience, and what sets it apart from other rooms, what you can expect once you join as a member. You'll learn all about tape reading and how to use time and sales to manage your entries and exits. Importantly, you'll also learn about the difference between the very strongest gap and breakout 1-minute candlestick chart patterns for stocks in the $15 to $20 up to $30, $40 a share range. So you've got really good breakout potential in the very strongest charts each morning. We also look at timing, trade management, and specific, clearly defined, well-explained entries and exits. You and I both know that if you've been in other live trading rooms, one of the biggest complaints is they're not clear about the entries. They're not specific about where to get in and where to get out. That's why Trading the Open has been so popular with the world's traders. I like to give you very specific advanced training, just as I do with my live day trading seminars back when I was doing them in Las Vegas, California, New York, Dallas, and elsewhere. One of the things that you'll learn in Trading the Open is how to identify visually minor gap continuations before they occur, breakout charts on 2-day chart patterns as they're occurring live in the markets each day. One of the things that my traders tell me they like best is the breakout alerts table. Take a look at it. You'll see how it works. You'll get specific entries and the tickers we follow on the focus list before the market opens. So step by step, you can look at each of the top watch list tickers, whether they're gaps or breakouts, and they're identified as gap or breakout candidates with specific price triggers to work with. And that's all defined ahead of the opening bell. Of course, we update that in market as things start to run on up for us, but you've got a watch list with specific triggers identified so that it's clear and well explained before 9:30. Then once the opening bell rings, we follow up with them and we click through the charts. I explain for you exactly why these charts make sense. We use tape reading as charts are breaking out to new highs, and I teach you exactly what to look for visually in the charts each morning. The main focus of what sets Trading the Open apart from other rooms is the quality and the professionalism of the education. I like to run it like a live day trading seminar, but online on the GoToWebinar platform, so it's convenient and easy to follow each morning, and you can get crystal clear explanations. You've got questions, I've got answers. Feel free to bring your questions to the live room as well, and I like to give you very specific answers. We'll pull up a chart together. Many times my traders will tell me about a chart that's running that I may not have seen, so you got the benefit of all the eyes and ears of my well-trained traders to benefit from as well, because together as a team we identify great breakouts and gap continuations and occasional pivot patterns on the strongest charts each morning together. Being a part of an active trading community that's intelligent, that's focused, not just a bunch of sheep following some guru and everybody sitting there watching one chart kind of thing. I think that's a failed way to trade. The correct way to trade is to go through maybe half a dozen up to 10 charts each morning, which is what we do. And we look at the very strongest charts and go back and forth through them. So we cycle through the strongest charts in real time so you can see what's in the process of breaking out. That's very important, and a great differentiation from other rooms that may just follow 2 or 3 charts and everybody's sitting there twiddling their thumbs or falling asleep because it's not moving. A professional day trader, like I'll tell you, is we like to look at a series of half a dozen up to a dozen charts and cycle through them in real time so you can see exactly what's breaking out and what's not, and exactly where the entry triggers are. And I also walk you through the exits in real time live, so you know where to get in, where to get out as you paper trade or practice these triggers to help you sharpen your own pattern recognition skills at Trading the Open. Another important benefit for Trading the Open is that you get professional tips, and occasionally I'll put together PowerPoint slides with specific, well-defined tips and strategies and live real-time activities for us to participate in together so you can sharpen your skills, not just follow along blindly as somebody's making an alert call like other places. I take my responsibility as one of the world's top educators in day trading very seriously, and you have my word, I go through training. I used to be a corporate trainer for companies like Ford Motor Company, Rockwell International, McDonnell Douglas, Sheraton, with somebody like myself as a former Fortune 500 training background. I like to involve you. So we've got interactive activities, and I'll say, hey, where would you guys get in this chart and why? Where would you trail the stop? What's the reason for that? So I get you thinking about trading, not just blindly following alerts. It's all about teaching you how to fish and not just giving you fish. So that's one of the things that you'll learn is I do updated tip sheets and strategies, kind of cheat sheets like these. Take a look at a couple of these that give you quick bullet point ideas that are updated each week with new strategies, a new featured chart pattern, and a different strategy to learn each week with me. So that way you know what to be looking for and you build on that week after week. So it's a very immersive, interactive coaching environment, unlike anything else out there in the industry. I put a lot of work into it because I want you to make it. Spend a lot of time on training and development and trader coaching to give you the specifics of exactly what to look for as you go from one chart to another to another. What are the differences and the gaps, the breakouts, the continuations, where to get in and where to get out, and the rest of it. Another feature, kind of a third big feature of the room, is I like to use break-even stops wherever possible for charts that start to break out and then start to pull back. I'll frequently say use a break-even stop. What I teach you with real-time dynamic live market examples is how to scale in and out of these charts. So if something runs up, say from 30.2 up to 30.4, I'll always say sell half now, trail a stop at break-even on the rest. So if you're long, say, 600 shares paper trading, you sell 300 at 30.4, trail a break-even stop at 30.20, your initial entry on the rest. And that's designed to help save you from large stop losses, because it's very frustrating, as we know, to get into false breakouts. So I like to mitigate that by using break-even stops. Something goes up, I'll frequently say use a break-even stop on it. If it runs up 8, 10, 15, 20 cents, stalls and starts to drop, I get traders back out at scratch rather than taking a big stop. That's a key core skill to get at as a professional active stock day trader. And you have my word on that. That's really important to understand the benefit of break-even stops, and I teach you how to do that each week at Trading the Open. One thing I would mention is that it's important to not try and trade alone, or even worse, trade with the wrong people. I've been trusted from active traders since the year 1999, and thousands of traders have worked with me in my courses and online alert services and the rest of it, seen my articles in Stocks and Commodities, seen me at Money Show and the rest of it. Learning from the wrong people is especially dangerous because they make up a lot of things in the live rooms, and you've probably seen a lot of the gamesmanship that goes on there. We don't do that. I'm very direct and to the point and give you very specific reasons why charts make sense defined before the opening bell, and then we follow up with live market scans in market so you can see newly emerging gaps and breakout charts that you can look at for potential trade setups. And I always give you very specific, exact, to the penny entry triggers ahead of time. That's something that you don't see anywhere else. The breakout alerts table tells you before the chart has moved to a price level where a likely entry trigger would be. And you can't trade without that. That's absolutely critical. Just having a room of people saying it's going up, maybe I'll get in, doesn't cut it, right? You need specifics, and that's what Trading the Open delivers. A quick note on what we're not. We're not a place that runs all day long, every day of the week, where people chit-chat and talk like they're at a local bar or something like that. This is very much a hit-and-run professional day trading room. I moderate it Tuesday, Wednesday, Thursday mornings because that window is the very best high-velocity momentum breakout window time frame of the market. Your Tuesday, Wednesday, Thursday mornings tend to be the best. Monday's usually the worst. Friday's kind of hit or miss. The midweek opens from 9:30 up till 10:30. I run the room from 9:15 to 10:30. Tuesday, Wednesday, Thursdays gives you a very focused, narrow window of opportunity to learn a lot from. Kind of like drinking espresso instead of cheap coffee. Quantity versus quality. I like to focus on quality where we hit the ground running. We know as a team exactly what to look for during the best window of opportunity, which is going to be the midweek opening hours, and be able to identify entries and exits for you and answer your questions. You know, like I said, you've got questions, I've got answers, and I'm happy to answer specific questions about why entries are set or chart patterns, or if you've got a chart you'd like me to pull up that meets our criteria, somewhere between, say, $15 and $50 a share with at least 1 million shares a day volume, say 15,000 shares a minute. We don't trade low float or penny stocks or e-minis or choppy instruments. We like strong, sustainable charts. And that's another thing you'll learn with me personally at Trading the Open. That brings me to one closing point. What we're not, in addition to not being an all-day long chit-chat room, we don't cover E-minis because unless the market's rallying up or selling off, the other 90% of the time E-mini futures contracts are choppy. And I don't know about y'all, but I think trying to go for 4 or 5 ticks in a choppy market is a recipe for complete failure. So we don't do E-mini day trading. We don't trade penny stocks because they're like video games. They pop and drop and they're very difficult. They get halted often. You get circuit breaker halts. You get price action based halts. They're very challenging. You don't get borrows for shorts. You know, if you're trying to short them, oftentimes penny stocks aren't available for shorting. We also don't trade the low float junk under $10 stocks. You know, you may have seen some of these recent rooms by my competitors who've been around only a few years. They were in high school back when I was teaching traders back in 99 and 2000. They will advocate incorrectly to trade thousands of shares of, say, a $3 stock because it's running. The problem with that approach is it adopts too much front-end risk. You're risking thousands of shares and hope that a cheap stock will run up 20 or 30 cents. That scalping approach is completely inappropriate, and I think it's the incorrect way to trade the markets. I prefer charts that may be $25, $35 a share that'll run 80 cents or $1, of which we may target 40 or 50 cents of a nice price action breakout. That's classic professional day trading, and it sets us apart from a lot of the other places out there. The other thing we don't look at is the expensive over $80, over $100 stocks like Facebook or Amazon or Netflix or Google because the spreads are too wide. I don't know about y'all, but many traders don't have million-dollar trading accounts, so I like kind of the sweet spot between $20 to $40 a share is my specialty. So just so you know, the kind of charts that I look for, charts with high liquidity, high volume, high momentum, relatively easy to identify entries with cut patterns, ascending triangles, gap continuations, and 2-day highs, breakouts above the previous day's high, so it attracts institutional volume. So that's what Trading the Open is all about. Certainly love to see you try the room at least, give it a shot, take a look at it, see the accuracy of the alerts, see the quality and professionalism of the training, and see how it works compared to anything else you've tried out there. You can also use the alerts for swing trading, especially gap continuation charts. So whether you're a day or a swing trader, although Trading the Open is mainly designed for stock day traders, if you're a swing trader, you can also get a lot out of it, being able to see the entries and exits explained live in real time for you. Another big feature is that we don't require any or have any proprietary scanners. You can use what you learn here with any real-time charting platform like eSignal or TradeStation or Metastock or NinjaTrader, or any of them out there that have live real-time charts. So you don't have to purchase add-on indicators. I don't offer any add-on indicators or special made-up proprietary BS scanners like other people do. All we trade is price action and volume with time and sales for tape reading. I'm a price action professional trader. I trade based on the strongest price action of things that are starting to run, preferably on increasing volume, and I visually verify with time and sales to look at how fast the transaction flow is going from a tape reading standpoint. I spend a lot of time teaching how to use tape reading with 1-minute candlestick charts, and traders love it because that's the simplest, easiest, most professional way to identify breakouts for professional stock day trading. Not any magic voodoo scanners or proprietary indicators that tell you magic signals for how to trade. That doesn't work. From experience, I'll tell you what works is identifying the strongest price action breakouts right after they start to move, get into the trade, let it mature, work out, and then get out at the first sign of trouble. Whether you see a reversal candle pattern like a shooting star or bearish engulfing, or volume starting to dry up, and we can see that visually in time and sales from a tape reading perspective, and you start to see volume start to hit the bid, and we start to see price start to pull back, we get out and lock in a gain. So that's one of the key strategies that differentiates me too, is there's no proprietary made up scanners or indicators or that kind of foolishness. You don't need it. All you need is your eyes and a brain and some good, honest teaching that teaches you the difference between the strongest breakout charts and everything else out there. And I hope Trading the Open can be your answer to help you identify bigger winning trades more often. I look forward to seeing you as a member of Trading the Open. I'm Ken Calhoun. If you have any questions, feel free to ask, and I'll see you in the live room. Goodbye, everybody. Go ahead and join us right now.